Alrighty, firstly and foremost, happy Sunday or happy whatever day out of the week you are watching today's episode on. Today is going to be some free educational content. Welcome if you are new to this YouTube channel. I put out videos Monday through Friday. Saturday, I tend to upload educational content regarding investing, trading, various different things regarding the stock market. And today's episode is going to be revolved around government data and how important it really is and how it ties into pretty much everything in the stock market. If you are new to the market, and I want to say you've probably been in the market for maybe 1 or 2 years, you may or may not know that government data is absolutely crucial. When I got into the stock market during Rona time periods, 2020 March, government data was very critical, but at the same time, I really ignored the government data and I just really focused on buying pretty much stocks because there was a very large drawdown given that time. 2022, though, that's when the data really caught up with a lot of things. So if you are very new to the market, by paying attention to government data, understanding how government data pretty much affects the entire market, you are very much ahead of the game because there are a lot of traders, a lot of investors that get into the market. They don't pay attention to like the data. They just basically buy stocks or buy ETFs pretty much like once or twice a month. And they don't really understand that there are time periods where you could have very wonky government data and it could be a gigantic buy the dip opportunity. Or maybe the opposite. Maybe something is in government data that is like, hey, you know, this is showing some signs of like crackling. Maybe I should be going a little like softer on my buys, maybe building a cash position because there could very well be a drawdown in the near future. I'm not a financial advisor. By all means, do your research, do your due diligence, but I've learned a lot in going on 6.5, almost 7 years since I've been in the market. So down below in the description is going to be a playlist to all my free educational videos on this YouTube channel. If you're new here, once again, welcome. I put out videos Monday through Friday, pretty much regarding when the market's open. And then Saturday, I tend to upload free educational content. Yesterday, I was actually taking advantage of some glorious weather. And I'm actually really glad that I did. I was on the golf course. Today, it's cloudy and it looks like it's going to actually thunderstorm. So let's go ahead and get right into it. I want to keep this video relatively short, maybe under like 12, maybe 10 minutes. I respect you guys' time tremendously. Okay, so if you want the most accurate information regarding government data, you're going to have to go to the U.S. Bureau of Labor Statistics. And you can just go ahead and Google this. I'll put a link down below in the description of today's video. But pretty much you get a calendar and you have access to every single report that is basically pretty much released. Now, obviously, if you're watching this video very much in the future, all this stuff has pretty much happened, right? But every single month, we pretty much get a unemployment monthly report. Every single month, we pretty much get job openings, labor turnover surveys. We get the dreaded CPI, which right now we are very much in a macro environment. Macroeconomics, inflation, deflation. Deflation would actually not be, if our economy were to very much have rapid deflation, we would be in a recession. So macroeconomics 101, if you ever hear that term, we are in a macro environment. They're talking about the money supply. Pretty much, are we experiencing inflation, which we are right now, current day of August 9th, 2026. It could happen both ways. We could be experiencing inflation of our money supply. We could also experience deflation as well. Microeconomics. Microeconomics is supply and demand. Pretty much different regarding, money. Supply and demand, prime example right now, pretty much the memory stocks. Prime example is Micron, MU. They are experiencing a rapid demand, but not enough supply. So obviously that's driving the prices of memory very, very high. Okay. Right now, 2026, we are in a macro, pretty much like I said, right? So, you pretty much see on this calendar here, we have a lot of stuff happening this week. We have the CPI report. We have the PPI, producer price index as well, too. So the most accurate website to find all this information on is pretty much just like the US website entirely. That's where you're going to get the most accurate. Now, I use various different websites as well. One website that I use is MarketWatch. I do like this website a lot because it kind of consolidates a lot of this information and everything. Pretty much just going to this past week, we had manufacturing data, pretty much job opening, labor turnover. The big one that moved the market was very much Friday, which was 2 days ago. Pretty much employment report showed that we lost 23,000 jobs, okay? Very big. Unemployment rate, I mean, hey, it looks like our unemployment rate's going down. That's very, very deceptive. I've talked about this a lot. The true unemployment rate here in America, it's definitely not 4.1%. I don't really want to dive too much into how all this stuff is calculated. If you want to actually learn about it, please do your due diligence. But pretty much the government sends out a lot of surveys. And in actuality, the true unemployment rate, because the government tends to stop asking people that are no longer searching for jobs, that's when you're no longer considered unemployed. It's probably in double digits, you know, to be perfectly honest, in my opinion. So the employment report was negative. That's bad. Really bad. But we are in a backwards environment right now because our macro environment is pretty much showing like, hey, we need bad data so the Federal Reserve can cut interest rates because we are in a inflation environment right now. Obviously, the Federal Reserve can't be raising interest rates when we are losing jobs. So understand that government data, whether we are in a inverse market, because right now we are in a inverse stock market, and we have been in an inverse stock market since 2022. Since 2022, the market wants a little bit of bad data. Not like recessionary bad data. If we get recessionary bad data, the market will sell off. The market wants a little bit of bad data. Oh, we lost 23,000 jobs. Okay. Imagine if we lost 230,000 jobs. That's like recession. That's terrible. The market would be going bananas. A little bit of bad data. A little bit of bad data is going to push the market up right now in August 2026. It's not always like this. If you go back very much well before 2022, when great data came out, like for example, hypothetically, if we got 83,000 jobs, right? That's bullish. The market would in theory go up. But because we're in a very bad macro environment right now, the market does the opposite. We get good data, the market goes down. We get bad data, a little bit of bad data, the market goes up. It's been like this for 4 years. 4 years it's been like this. Crazy, right? Utterly bonkers. So, Friday, 2 days ago, we had a very green day. And believe it or not, there are people in the stock market that are very new to the stock market, and they won't understand why stocks are going up or stocks are going down. If you're new to the stock market, stocks just don't go up for any reason. Stocks just don't go down for any reason, okay? If you log on to your profile and you're like, man, why is everything selling? You know, why is everything red? What is going on here? Why is everything red? You could very well be scared out of your positions. But if you know about government data and you understand it, and you're like, okay, we got some, you know, hotter than higher inflation. Our inflation reports are really high. Stocks are going down. If you've been following me for the last 8 months now, I've been buying tremendously. A lot of stock, tens and tens of thousands of dollars worth of stocks publicly, because the market's been going down. I'm like, hey, I'm taking advantage of this buy the dip opportunity. A lot of people, believe it or not, a lot of people will sell all their stocks. They will leave the market. And they will leave the market with a very bitter taste in their mouth and never, ever come back. It's very true. It's very unfortunate. Good vibes all around, and also good thoughts to everyone out there that might be unsure. But on the flip side, look at what good government data did for us on Friday. You got like tech stocks, my stocks, that are very much in the green. SoFi, AMD, obviously some pullback, but pretty much any stocks very interest rate sensitive is getting a boost. Obviously, speculative names, SpaceX falls into that category, very big boost. You got the major indexes, you got the SPY, you got the Qs, you got the IWM, Russell, NASDAQ, Dow, even Bitcoin showed a little bit of green, finishing a little bit of green. Oil definitely below $80 a barrel. So government data plays into everything. But here's the reality. There has been so many times in this market in the last 4 years where the government data will come in and the market will like it, and the market will go up, and then the next couple days the market will go right back down. So it works in both ways. You got to be paying attention to government data if you are a long-term investor. You got to be paying attention to government data if you're a short-term investor or you're doing some short-term trading. Even if you are day trading, you got to pay attention to government data. And why is that? Because if you're looking for stocks to day trade, there could be some good stocks to day trade if there is, let's say, bad government data and stocks are going up. And then on the flip side, let's say you're a long-term shareholder of a company. I'll use SoFi as an example. Government data comes out super, super good, which means we're not going to be getting a rate cut, and SoFi goes down. Hey, me as a long-term investor, I'm going to pick up some shares for the future, discounted shares for the future. If you are opening a short-term trade position into a company, hey, government data making stocks go down and down and down, but this government data is temporary. It's temporary government data. Just like oil. Oil, very much temporary because of the stuff in the Middle East. So, for me personally, hey, I've been taking advantage of this gigantic oil spike. And a lot of people, it's very unfortunate because a lot of people that don't know really how to find information or understand what is going on, they get scared out of their positions. Have I been scared out of my positions before? Yes, I have. Oh, yes, I have. As a very young investor trader, I can't believe I'm saying this, but many years ago now, yes, I have been scared out of my positions. It sucks. You lose money for the future. And it's a utterly terrible feeling to be shaken out of a great investment and then just see that stock just go higher and higher and higher because something came out that you were not understanding at that time. Good vibes all around. Hopefully this educational content video really helped out some new people to the stock market. I'm going to be posting a lot more free educational stuff regarding pretty much a wide range of stocks. So definitely stay tuned for that. If you enjoyed today's video, smash the like button. Let me know down below if you want me to cover anything primarily. Last week, I pretty much was talking a lot about charts. I can definitely cover moving averages more. I can cover how to read indicators. A couple weeks ago, I went over the relative strength index, RSI. Probably next week, I'm going to be going over some more technical analysis. But every single thing in the market, government data, the charts, the moving averages, everything plays into making long-term profits and also just building wealth in general. All right, take it easy, everyone. Later.